welcome back. So what we're going to do in this short video is basically to make sure that you have everything ready. So in order to do that, what I'm going to do is I'm going to start fresh and take you through the exact steps, and that will make sure that you have everything set up the way it should be so that we can continue. And I'll show you how to add an indicator and maybe one or two things about how to use it. Okay, so let's do that. Right, so what I'm going to do, I'm going to click here on the top left hand side where it says create a new chart. So when I do that, it gives you, and yours might look different than mine. I'm with forex.com, but when you scroll down, let's go, you have lots of different options, but in my case I'm going to go down to Forex Pro 6, sorry, because I know that the Euro USD is located there. So when I click on it, I get this ugly chart again. Oh my goodness, how are we going to solve this? Not to worry, because now you already have your template copied over, right? And you have your indicators. So all we need to do now, since your indicators and your template is all set up and ready to go, all you need to do is to right click on it, go to template and scroll down and go to easy trading signals basic and click on it once, and there we go. Immediately you have everything loaded. Now by default it loads the 1 hour chart, and the 1 hour chart does not include the actual market times. So once I click on 15-minute level, then we have all the detail we needed. So now we have our market sessions again, and we have our pivot points, and we're ready to go. So one of the questions is, but isn't there some additional indicators that can help me trading? And yes, of course there are. There are a number of very well-known indicators, and I'm going to show you just one or two at this point and do a brief discussion on it and then take it further from there. So how do you do indicators? How do you add them to your chart? Well, you scroll down here where it says indicators, and you also look slightly different, and locate the one you like, let's say MACD, and you double click it, or you can drag it. I like double clicking it, so I just go double click, and this is normally what you'll see with for instance MACD. Some of them have options, like for instance allow DLL imports, and I'll show you why that is important in just a minute or so. On inputs, you can basically select the input values. In this case, the default is 12, 26, and 9, which is very standard for MACDs. So I'm just going to click OK, and then you can see what that looks like. So let's just quickly do that with another indicator, and let's add a stochastic, which is down here. I'm going to double click, okay, and since I was on inputs previously, it opens it up there, and it's set to 533. That's also a default, and of course you can change it. Okay, so that's what we have here. So I'm going to move myself up here to the right hand corner. Yeah, that should do it for now, and let's take a quick look. So with the MACD, you basically have bar chart and line charts combined. Not my favorite way of looking at MACD, and I'll show you an alternative maybe in a lesson or two. But for now, basically what you're looking for is the crossover points. So you'll see over here, the moment that your bars cross below your signal line here, and the bars start moving down, that crossing point over there is basically something that we're looking at, where the market is potentially moving down. And as you can see, then it does exactly that. On the opposite side, of course, we have we have cases where the bars cross over like this, and then we have potentially a move up. And when you start looking at how they correlate, you can start figuring out good points to enter the market and exit the market. So, maybe you entered the market over here, at this level, when there was a crossover and it was above zero, and then you went up and you exited the market over here. But you'll see very quickly that just using one indicator like this is not necessarily ideal, because they never give you 100% what you want. And once you start trading them with your own money, you'll very soon realize that this is not the answer. It's not quite as simple as it looks. And then that's why we add additional indicators, like for instance the stochastic. And the stochastic is an indicator that basically tells you when the market is overbought or oversold. Basically it means when people get fed up of buying or fed up of selling. And there's a sentiment in the market to reverse and trade the opposite way. Now you'll start seeing the real power of the pivot points and the market starting lines over here when you combine it with additional indicators. So in this case, let's look at the stochastic. So stochastics, when it's below 20, we say that it's oversold. So it's overdue to change direction. And when it's above 80, just the opposite, it's overbought, and we basically expect that we'll see a bit of a sell-off. When you combine that with your pivot levels, you start seeing some very powerful patterns where they confirm each other. So in this case, here we can see stochastics below 20 and crosses over, and we can see over here, yes, it did in fact touch that point, touched it again, and we're looking for a move up. And in this case, MACD is not perfectly confirmed that for us, but we can see that it's above zero, and therefore we can see, okay, good, we should be safe to trade going upwards. And over here it hits our pivot points, and pretty soon after that we can see that MACD tells us that we might be heading down, and the stochastic, which is always a little bit faster than MACD, already signaled to us earlier that there might be a good reason to suspect that the market is going to move down. And one quick thing I want to show you in that regard is this, which is called divergence. So you'll see if I draw these little lines, and I just use it by using the trend line indicator over here. If we look at this, okay, that's not perfect, but I'm just going to leave it like that for now. You can see that we have higher and higher levels here, but with the stochastic we have lower and lower highs. You see that high, 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 it's going lower, and in the market it's going up. And at the same time we're hitting the top of this pivot point, so we know, aha, the market is overbought, it's reacting contrary to what it should be acting, and that's what the stochastic is telling us. And therefore, after that, we indeed see it moving down. So, I don't want to overwhelm you, but I hope that this is an interesting peek into how you can start setting up your own trading strategy. And I will be delving a little bit more into this and any other indicators as we go forward. So, hope you'll join me, and thank you.